All right, everyone. Well, thank you so much for joining. We are so happy to have you here today. Before we jump into who we are and our topic today, I just want to go over a couple quick housekeeping things. There, you will see that there is a chat icon and a questions icon. So throughout the time of this webinar, please use chat section for any general comments, conversation with other participants, and then drop your questions in the question section. We'll be monitoring those as things go on and answering some of those live, and then we'll also save some for the end. So feel free to just drop those in there as they come to you. Also be on the lookout. We're going to start out with a couple polls here in a couple minutes just to help shape our discussion, learn a little bit more about who is joining today. And then lastly, you will get a link to today's recording that will be emailed to you tomorrow morning. If you would like to review that, share that with any colleagues, you will have access to that. So that's all for housekeeping. Today, we are lucky enough to have Joey Liner joining us today. He is an absolute legend in the space. He runs Liner Consulting, Liner Connections, and is here to help companies stand up their performance marketing channels. Just an absolute expert in that space, and also a personal friend of mine. We got to work together several years ago and then have stayed in touch and are both in the San Diego area too. So we are happy to have him here. And then I am Phoebe Pinder. I am a sales director at ActiveProspect. So I assist bringing on all new accounts. I help define what is the best use case, the best ways that we can help, and all the way through those conversations, through onboarding. I assist with several verticals, but financial services being one of the biggest ones, which we'll be focusing on today with a consent-first approach on how to scale your business and bolster your ROI. We'll be talking a lot about financial services, as I mentioned, but if you're joining from a different vertical, I encourage you to stay. A lot of what we share will still be applicable, so there's still learnings to be had. But before we get into the topic, into the landscape, I do just want to put a couple polls out there so that we can learn a little bit about who is joining today. So we have one poll here that you'll see. What is your primary business vertical? So are you in mortgage, financial services, debt, or other? And if you could just take a couple of seconds to vote for that, then we can learn who we have on this webinar to craft it specifically towards here. So I'm seeing a tie between financial services and debt for now. So we'll give it a couple more seconds. And then a lot for others. So maybe we have others in other verticals. So I'll make sure to leave some space that we can cover what's applicable across the board as well. All right. Yeah, it looks like other is our winning vertical. And then we have one more poll question just about if you are a buyer, seller, or a service provider. So we just want to make sure that this is relevant to those that are joining today, as our services help with all of the above. So it looks like we have service provider and buyer are kind of at a tie right now. So we'll just give that a couple more seconds. No sellers today. I guess we just have buyers and service providers. So, all right, perfect. Well, thanks for that information. We'll keep that in mind as we keep moving today. To kick us off, I want to talk a little bit about just the landscape that we're working within. And so that we can know, we like to specialize that based on what's actually happening in the world, what's happening with our consumers. So I'm going to kick it over to Joey to just kind of set that landscape for us before we get into the best way to go about what's occurring today.
Thank you so much, Phoebe. It really is an honor to be here with you. And like you said, we go back. We've been able to work together. Now we're both living in San Diego together. So it's just really cool to be able to be here with you and discuss the financial markets today. In consumer finance in general, if you look at this time last year, or performance marketing in general, the lead gen space was running a little scared this time last year, just not understanding what was going to happen with the regulatory environment. The economic conditions were a little bit scary. So we were building up anticipation going into the election cycle. And at that point, there was the Fed had announced that interest rates were going to there were going to be multiple reductions in interest rates over the next year and a half. I think 3 different instances. So I think a lot of the mortgage companies that um, were, kind of dormant for a while on their refinance activity, were starting to feel the anticipation of a nice little refinance wave that would be coming in 2025 and 2026, and starting to staff up, because a lot of these companies had downsized their headcount. They had to stay and do and operate, whether it was loan officers, processors, underwriters. All of the operational folks at the mortgage companies had to right size. And so the once that news came out, there was, hey, we need to go back and get some headcount, because we're going to now be able to, with direct to consumer, we're going to have to be able to satisfy consumer demand. And I think unfortunately and we'll talk about that in a second, but there hasn't been that much of a reduction yet. So I've seen a lot of mortgage companies hire all facets, loan officers, processors, underwriters, and we've only seen minimal interest rate movement downward, and there's reasons for that. And so the look, we're never going to see probably 2.75 30-year fixed again. That was a really shock and anomaly to the system for over, you look at 100 plus years, you never see rates that go that low. But look, if we could get to 5% or 5.5%, I think that would create a lot of relief and another spur in the housing market, which would be really cool to see. Now, what's happened since that activity where the Fed said that they were going to lower interest rates? Well, we went through the election cycle. Obviously, Trump won, and he does not have the best relationship with the Fed. That's very clear. He's been trying to convince Commissioner Powell to go ahead and lower, bully him into lowering interest rates further than where they are. But the tariff situation, that has obviously fooled the market drastically as well. And it's really just a whirlwind, right? We're seeing the stock market specifically go down. It's gone down frequently, but it's spiked up too on, as we negotiate the different trade rules with separate countries, right? And obviously we're seeing some of that turbulence out there in the market. But one thing that's clear to me, and I think a lot of people probably on this, is that consumers need money. They need some relief. They need some sort of, because of the economic conditions. Obviously, we know groceries, gas, day-to-day essentials, cost of living is still up, still high. And, as much as we see inflation easing, I think we know that that consumers need that extra capital. And how can they do that? They can either pull money out of their home if they have good enough credit. We're seeing like home equity lines of credit very much front and center for a lot of the mortgage companies. You see that a lot of the comparison sites and listing offers out there. There is some refinance activity going. If somebody bought their home at like 8% or 7.75%, they can come down. I think the 30-year right now is a little bit below 7. So there is some refinance activity, some refinance cash out activity. And you can use that cash out for day-to-day essentials, home improvement projects, whatever, paying for school. And then also there's personal loans. Personal loans, you can go out and get those in, pretty much now you can digitally qualify if you have good enough credit. There's some relief loans that are coming out for folks that may not be able to qualify for higher credit, grades for personal loans. And then for folks that have racked up too much credit card debt, we're seeing a lot more in the direct consumer debt settlement, where the debt settlement companies are negotiating down, typically 10,000, 15,000, 20,000 more in credit card debt, and just helping that consumer get back on their feet, and they're going to get their credit slashed, but unfortunately, they can't afford the day-to-day living anymore, and they can't pay their credit card. They're just paying maybe the the minimums, and unfortunately, that just all goes to interest and doesn't eat into your principal. So the debt settlement businesses are growing rapidly as well, because again, there's just the reality is the debt's not going anywhere; it's only going higher, and I think it's very clear consumers need money in one way or another to keep up with cost of living and standards in 2025. So a lot's happened since the election, and I know we'll talk about some regulatory and compliance. It's a big part of this webinar, but obviously the one-to-one consent got thrown out, and that's drastically affected the performance marketing space as well. So looking forward to digging in to all that with you. But I felt it'd be good just to discuss the market conditions, at least how I see it, and happy to take any questions, comments around that as well. But just that's my thoughts on a high level.
Yeah, that's perfect. Thank you, Joey. And obviously, the current events and what's happening in the world translates into leads because leads are consumers. And so, in some verticals within financial services, you may see that there's a little bit of an increase in volume, like personal loans, debt settlement, and then other areas based on the rates, there may be a little bit of a lower volume than what was expected. So, with that variable and all that, how volume can change, you want to make sure that you're making the most out of the leads that come through and that you're getting the highest quality leads possible so that what does get purchased as a lead has a high likelihood of converting. So before we get into the compliance of it, having the right tech in place, we're just going to start at the very basic, which is making sure that you are buying the right leads. And I'm going to have Joey talk a little bit about that today because as a consultant, that's some of what he helps with is whether it is a company that has been purchasing leads for a long time and is looking to change directions or revamp their program, or a company that doesn't buy leads at all and is interested in testing that channel. Joey assists with that from beginning to end. So you want to make sure you have the right relationships, working with the right vendors, and are making sure that the lead type that you're requesting is in line with what your team can actually work. So I'll let Joey talk a little bit about standing that up, having those discussions from the start, and then we'll get into what process should be in place to deliver those leads and optimize that flow.
Yeah, thanks, Phoebe. Yeah, I think at a high level, what we learned again last year about the regulatory environment was diversification was key for any type of consumer engagement or lead activity that business was operating under. Just because if you were buying like all leads that were what we call shared, right, like semi-exclusive leads that were you could purchase out there in the marketplace, there was fear that may have been going away. So I think a lot of companies that were, especially in the consumer finance space, that's shared leads has always been a front and center, leading channel of lead generation. Use LendingTree as an example, right? They're the pioneers of mortgage, lead generation. When banks compete, you win, right? So there was, again, this time last year, there's a lot of uncertainty about how that was going to play out with the new one-to-one consent rules and how consumers would have to select which companies to speak to. So I think a lot of brands learned through the one-to-one consent process too, how they were being positioned, how they were being, not only did they need to diversify, but how was their brand being positioned? Was it a blind process? Was it our marketing partners? Was it link out? Was it actually like, did they self-select the brand? But it also taught them that the diversification is key, and high intent traffic, like you said, especially if you're rebuilding your sales staff and you have headcount efficiency goals that you're trying to achieve, maximize that output per rep. You really looking at, it's like in consumer finance, I see a lot of the comparison sites where if you go on like Google and you're searching for refinance or you're searching for personal loan, you see a lot of the comparison sites where the consumer it's a listings page, they can see the brand, maybe a write-up about it, or sorry, brand, the write-up about it, maybe the rating. So it's easy to kind of self-select in that way. And it's high intent, it's through search. Also, you're seeing a lot of expansion in the warm transfer market now where there's a live interested consumer being handed over to a loan officer or a debt settlement agent because the one-to-one consent process has been thrown out. So an inbound call is great because obviously it helps keep sales reps more efficient and know that they're not having to chase as much outbound. So I always advise my clients, like, try to find that rhythm of inbound and outbound harmony, because you don't want people just sitting around waiting for the phone to ring, but you also don't want them having to spend their whole day necessarily chasing down records. So you try to find that balance in a perfect world of inbound and outbound. And warm transfers are back, like I said, front and center because the FCC one-to-one consent has been thrown out. A lot of brands were cautious about going into 2025 with warm transfers. See a lot of that easing up across all verticals, even beyond financial services. I know a lot of folks are on this call today that are not just financial services, consumer finance. So also the affiliate market, direct traffic to site. I think that's also what a lot of direct brands saw as a way to drive consumers to their funnel. They get to control all the messaging. They can control it's their brand, right? So it's their disclaimer language for compliance, but it's also could be their rate offer, right? It could be their benefits that they want to emphasize to the consumer, why to do, direct business with them. So having direct traffic to your funnel where you're paying on a performance basis is very popular, and it continues to grow, whether that's like third-party email traffic where you're inboxing a consumer, or through a newsletter, or there's listicle sites where you see like, hey, top 10 benefits for military, or native ads are also very popular. I mean, look at the success of like Finance Buzz. They've just continued to blow up in the performance marketing space in a great way. It's an amazing story. They're doing TV, but they have a ton of just continued content and inventory that they're delivering that's adding value to the consumer. And they have a lot of native advertising in those publications and sites as well. So that's where I'm seeing a lot of ways to drive consumer diversification. Is key in driving consumer activity to the brand. So I think brands are taking more control of that consumer experience, and they're still buying a lot of leads from the marketplaces where it's shared, but you're seeing a more diversified approach. And like you said, building strategic relationships with your vendors is key. It should not be transactional. It should be strategic, where everybody wins. The consumer wins, and they, ultimately, hopefully, are getting placed at where they should, consider doing business. But obviously, the lead generation business and the brand, they have to have, success together to scale. So there's a lot of different ways that I help work with my clients in diversification and understanding which channel or blend is best for them.
Perfect. That's really helpful, Joey. And as he mentioned, now let's put ourselves in the shoes of, you have your diversified leads coming through. You have some inbound, some warm transfers, some shared leads, some exclusive. You're working with the right partners. So then how do you continue to have strong relationships with these lead vendors? And then what tech needs to be in place to really bolster your ROI, what we're here talking about today. So we'll get into compliance piece in a second, but first things first, when having the leads actually delivered, and you want to make sure that those leads are optimized, the leads that are entering your CRM system that your team is going to dial out on, or you are going to text, you want to make sure that it is a real consumer, and that it is a consumer that is interested in your offer, something relevant to you. And so having a lead management platform in place is extremely important, so that rather than the lead is originated and then immediately just dumped into your CRM system, you're able to run through some checks on that lead, and then also run reports so that you can continue to have those strong relationships with your lead vendors. So our tool Lead Conduit, for example, is a lead optimization, lead delivery platform to help manage everything coming through. So what would happen is the lead would be delivered into that platform first, and then our system would deliver that into your CRM. And what takes place between lead origination and lead going into your CRM is nothing that would take a long time. So don't worry about speed to lead. Most of our flows happen within 300 milliseconds or less. But we could check for anything that meets your criteria of a specific lead, so that you are not hand holding and checking every single lead that comes through. you have it set and you can trust that what's coming through is what you're looking for. So for example, you can check all your required fields are present on a page. First name, last name, email address, phone number, the basic things, because if you don't have that information, you can't contact that person. So that's not a value to you. You want to check that that's there. You can check against duplicates so that you're not buying the same lead over and over again within a 30-day window or whatever that window is for you. You also will take care of all of the compliance steps, make sure that you have your proof of opt-in, you check your consent language. We'll get into details about those in just a second, but for the sake of the lead optimization conversation and lead management, making sure that's a step that's taken care of before that lead even hits your CRM system. And then again, in a platform like Lead Conduit, we have a marketplace of third-party integrations. That's pretty unique to us. We have gone and partnered with third-party companies so that we can offer over a dozen integrations such as phone validation, email validation, litigator scrub, so that you can just add those to your flow, pay per usage as you have those for what the need of your current time is. So then when that lead goes through that, if it fails at any point and it's a filter that you have set saying, this lead isn't a fit for my needs, that lead will be rejected to your lead vendor with the reason for the reject in the response. So then you can work with your lead vendors to say, hey, the reason we rejected these leads is because they were all duplicates or because they didn't have trusted form on them. Lead Conduit can also help you build those custom reports. And this helps to manage those relationships because Joey and I have both been on the lead seller side of things before. And something we would often hear is, hey, these leads aren't working. I want to cut the campaign. But we would really need insight as to what's not working about the leads so that we can optimize it and we can change it. So that's why you want to have tech and tools in place to be able to look at that on a deeper level. We'll talk about Trusted Form for compliance in just a second, but one of Trusted Form's products under its umbrella is also Insights, where we can tell you data points about the lead that you may not otherwise know. One that I'll spend a little time talking about is originating domain. So what you'll find when working with lead vendors is they'll often send you a sub ID, but you don't know what website that sub ID is. So it could be freeiPads.com or I'm looking for a personalloan.com, which is going to have a different performance when that lead hits your CRM system and when you begin to outbound on it. And you may be looking for more incentivized leads to fuel a large call center, or you may have a smaller number of agents who need these higher quality leads. And so what you'll be able to do with the data that we can provide through Trusted Form Insights is run it against your conversion data to see, oh, hey, we've been purchasing from this specific website and it converts really well for us. So as many leads as you can send us from this website, we will take it. This other website has never performed for us once. So we don't want any leads coming from there. And then in a lead management tool like Lead Conduit, you can just set it. This data point is original to us. So this would be within Lead Conduit and Trusted Form pairing only. So you could set it and that lead wouldn't enter. So you want to be in deep communication with your lead vendors saying, this is what's working, this is what's not working, and then have an automated system in place to be able to manage that for you. Otherwise, that can take up hours and hours of team members' week where that could be spent on some other time. So we'll get into the compliance piece in just a second. But Joey, on the lead optimization, relationships with vendors, anything you want to add before we jump into compliance?
No, I think your points are all very valid, especially the litigator scrub. We'll talk about that here on the compliance component as well. TCPA cases are still on the rise, but in general, as you're looking at getting the right leads in the door, having a system like Lead Conduit, what I've seen for clients that use it that I work with and work with you guys is that it does really help them expand and work with a lot more publishers once they narrow down that ideal filter set that works for them, right? And it may not be identical to each publisher or partner,
Right.
but that's the cool customizations that you can do. It could be by marketing channel, it could be by certain source, but it has the ability to allow you to have the different you know different business rules in place to help what's best for you. What's best for you may not be best for the other business, right? But that's okay. That's why um, knowing your what's right for your business, what's coming in, what the consumer journey is going to look like, and all the different um, front end tactics that you can use to help your success. Everybody wins again. So yeah, I'm a big fan of Lead Conduit. I think I think it's going to continue to help a lot of the businesses, consumer finance, just expand as the market dictates.
Hmm. Absolutely. And before we go on to the consent and compliance portion of our conversation today, we have one anonymous question in the chat that I think is
Yeah.
relevant to this topic, which is, does diversification result in a more expensive approach? What other challenges do financial marketers face when trying to balance lead volumes with lead quality? So Joey, I'll let you kick that off and then I can jump in and add some things.
Yeah, it typically there's no immediate correlation to higher cost or a more expensive. It depends though. If you're looking for a higher intent consumer, typically yes, because if you like in consumer finance, the comparison site traffic or the direct affiliate traffic, it does typically work off of where your bids are, right? And typically, if you're going to bid more, you have to convert better. But that's maybe the type of lead that you're trying to work through diversification that you may have not had coming in already. If you were just buying like shared leads and now you're trying to tell your sales staff that you're bringing in a higher intent consumer, it's going to help morale. It's going to help the team just get excited that you're diversifying your approach and you're bringing in different types of consumers and their intent. And look, there's also ways to diversify with lower intent traffic too. You can use call center agents like qualify and transfer, like warm transfer agents, to help you go through those as well. And like you can buy cheaper leads like co-reg data, and then go out and go through a qualification script, get the consumer on the line, warm transfer that to their agents, where your agents are again focusing on an inbound call, being more productive. So I think when you're looking at diversification, you obviously, of course, have to put compliance at the front burner, but you have to look at, hey, going through the whole FCC one-to-one consent exercise, did I have too much? Did I have too many eggs in one basket? How is my brand being positioned? These are all things that you look at, and then as you're trying to feed your sales staff, you want them excited and motivated every day to hit the front lines, right? And to know that they're not going to cherry pick lead sources. They're not going to say, "Oh, I only do really well with this type of leads." Like you want them to feel like you're constantly looking at different types of consumers coming in, and how their consumer journey is affected by the output or where the placement of where your ads are.
Hmm. Yeah, and I think that there's two types of diversification within this channel. What type of lead is coming through? Is it owned and operated leads? Are
Yeah.
you buying from third parties? And then also diversification of your lead vendors. Who are you working with? So I think, and part of the question, is it more expensive? Well, as long as you have an ROI on these leads, you have a system in place to check
Yeah.
that they are good quality leads, and you have the infrastructure in place within your company to work them, well, then it's worth it. But it is kind of let's test it and then scale what's working. So rather than let's blast all channels and get as much
Yeah.
volume every single channel that we can, that's going to be hard to be able to figure out what's the best way to work it and is it working for us. So it's taking it in chunks. Okay, let's get some new traffic vendors to work with, sending more volume to our owned and operated sites. Let's see how that performs. Okay, now let's add on a third party lead vendor that's going to post leads originated from their site into our CRM. See how that works for us. So if you do it in the right approach and make sure you have the right infrastructure in place, then the ROI is there. And when balancing lead volume with lead quality, which is the other question, which is kind of what Joey talked about, are you looking for enough volume to be able to fuel a call center so that they constantly have leads to dial out on? Or are you looking for those higher quality leads that may not be as high in volume, but that are more workable, have higher interest, have a higher conversion rate? So again, it goes back to testing, making sure you have the right infrastructure in place when it comes to lead management, getting that lead through the door, but then also working with your team on the best way to speak to the consumers that come through from these different channels. But that's a great question to ever ask that one. So now let's jump into the compliance section of this webinar, which is hugely important because that is the way that you can make sure that you can run this awesome channel that has scale, that has performance, but also in a way that you feel secure and you can sleep easy at night knowing that you have the proper protection in place, that this channel is compliant. And that's where some of the other trusted form products that I hinted at earlier that I'll get into now are vital to have on a performance marketing channel. So for one, Trusted Form Retain is the product that documents the consumer opt-in. So this can both be generated on the third-party lead vendor sites that you buy from and on your owned and operated sites, piece of JavaScript that goes on the website, and then creates a certificate which has information about the consumer going through the lead form, as well as a video replay of the consumer actually filling that form out. And then we store that in our platform for a 5-year period, and we give you the URL so that you can access that certificate at any time. So if and when a complaint comes through that, why did you contact me? I'm suing you. I did not want you to call me. You can grab your trusted form certificate for that documented consent. But there's a second part of that, which retains. So that's going to show you what occurs on the page, but you also want to make sure that what is presented to the consumer is in line with what your compliance standards are. So that's where Trusted Form Verify comes into play, so that you can actually ensure that your required consent language is present on that page, so that what the consumer is opting into is actually in line with the legal standards. And we even launched a new feature recently on Trusted Form Verify, where you can even check the font size and color of the language that's presented, which is really important because maybe that language was there, but if it was white font on a white background, it wasn't actually visible to that consumer. So you want that consent language to be present and to be visible. So with those two things in place, you can have that in your lead conduit flow, so that automatically every lead that's coming through the door, that is happening in real time before that lead is even delivered, so that you know, okay, we're clear for our team to start reaching out to these consumers because we have documented proof of consent and our consent language was present on this lead form. So those are some really important measures to have in place. We've seen some things in the space of companies getting in some hot water when this wasn't present, and it can be expensive. Truist just had a $4 million TCPA settlement. And so that, when we talk about ROI and compliance, it is one of those things that you want to have in place, because one lawsuit can come through and just be a huge business changing charge. So that's an important measure to have in place. And I know that Joey has had some instances pop up before that you've dealt with that you may want to speak about a little bit.
Yeah, and really just talk about the current landscape too, with cases on the rise, because private right of action has not gone away. So as much as the one-to-one consent at the federal level is now thrown out, and that's clear, it's not coming back up because the 11th Circuit said we're not going to retry this. It's actually as part of the TCPA, one-to-one consent will not happen. So a lot of people, of course, within a lot of performance marketers took that as, hey, I don't have to worry about this anymore. Well, you absolutely do, because the one-to-one, consent was there, of course, for proof of consent and getting the consumer to opt in. But the consumer still has the private right of action, so they can still sue you themselves. They can threaten you, send you demand letters, which we constantly see, unfortunately, across all the verticals in our space. And so I've joined the board of Responsible Enterprises Against Consumer Harassment, REACH, because we want to stop unwanted calls going out, but we want to be able to continue to grow calls as a channel, especially where consumers said, hey, I'd like to get a mortgage quote. Hey, I'd like to get an insurance quote, because it's still a very effective channel to be able to get a consumer on the line, connect them over to a sales professional so they can start the sales process. But to your point about tracking that consent, I love how you guys added the font feature, because again, I think as brands went through the process last year, they learned how they were being positioned, what the message was saying. Well, they had known that they had approved language probably previously, but now they had to see it constantly. And maybe you do need clear font or have it a certain color, but storing that consent helps you with the private right of action, because all these litigators that were banking on the one-to-one consent going through, all these professional litigators, they're still going after brands. They're just doing it, in the sense of maybe they're just saying for the private right of action. Again, I can get you $500 per instance, so I'm going to sue you, ABC brand, and try to get settlement out of you. So having that video playback, having the clear consent is something that will always help you at least upfront defend those complaints, because you get the complaint, you can play the consumer the video or the plaintiff the video, and then show them that obviously they did, it's clear, and we have storage of that now. So it's very, very helpful in trying to mitigate settlements for your brand, because again, you want to use the channels that are effective for the right ROI. Like you talked about, testing different channels, that's key for diversification, but tracking your ROI and testing that out. And you don't want the consent to be a hindrance of your success. And so it's just it's part of the normal standard operating procedures in direct consumer call centers and outreach, is to have that clear consent. And I love the enhanced features that you guys have added to Trusted Form. I think for anybody on this call that paid attention to a lot of your previous webinars, you guys did a great job on the one-to-one series. It's very clear the private right of action is not going away for now. It's possible under this administration. Look, anything's possible under this administration. Nobody thought the one-to-one consent would go away like that fast, right? So it's possible they may eliminate the private right of action in under the TCPA. Is that going to happen tomorrow? No, but it's possible it could happen in the next 4 years. It's the whole TCPA could be revised completely. So we're all witnessing history kind of like unfold in front of us here. And we all have a say in that. That's why I joined Reach, because we work with regulators. We work with now the state levels are all also going to have their enforcements different than the federal, right? So as much as the TCPA is federal rule and law, the states can have their own specific communication laws as well. So part of Reach is we're working with certain states, like some may be familiar in the performance marketing space, like Florida had a 3 touch point rule within 24 hours. They called it like a mini TCPA, right? Maryland has a rules now, Minnesota. So it's important that if you're operating across multiple states, which most direct to consumer businesses do within the verticals that we're talking about here, you have to be conscious of the state laws as much as the federal laws. So having that clear consent is going to be huge, especially if states start going off on their own and creating their own business rules. You have to be able to adapt to that and track that properly. And again, we're trying to satisfy consumer demand. They need money, they need relief, they need they want this communication. They're asking for a quote, and we're just, we're trying to do it the right way, compliant, getting them what they want. And there's always going to be these professional litigators, because they can get the private right of action. So you have to have compliance still at the front burner. Don't just assume, again, the FCC one-to-one consent's gone. This is a pro-business administration. I'm good to go. I can kind of do what I want. Where, you got to take, hopefully everybody's, making sure that they're still putting compliance on the front burner as far as their operations, because it's critical to succeed, uh, and and have the KPIs that you want um, for your marketing, metrics, but obviously just knowing that you're doing right by the consumer and right by, your business by protecting it by having the standards in place for the controls.
Yeah, and I think that it's great that you brought up the serial litigators that are out there, because even though the one-to-one did not go into effect, that is almost an opportunity for them to go even harder at litigation, because they know that companies are gonna have their guard down maybe a little bit after this, and, take a step back and think that they don't need proof of consent at all, and the TCPA is still strong and in effect, and so they're gonna look for windows of weakness that they can use at this moment. So you want to make sure that everything is continued to be buttoned up. And we had a question that said, with the one-to-one consent requirement struck down, how are you approaching proactive risk mitigation today? So I think that we covered that in kind of just our discussion overall, but to just even hone in on this question that came through, proof of consent is vital, and making sure that you're checking that your consent language and what you need to be present on that page is there through those tools. On every single lead. This is both through the leads that you're purchasing from third party. That's where you're going to use that verified tool, check on that consent language. But then trusted form retain will be used for all lead types. You want to have proof of consent both on your third party and on your owned and operated forms. And sometimes I hear from people, oh, we have our own internal system to kind of show some consent on our owned and operated, either through some video replay technology or an in-house system that they may have put together. That's great, but one thing I like to challenge when it comes to that is that if a TCPA lawsuit escalates, the court is going to question that and say, hey, you generated this proof of consent and it's your own data. This data could have been manipulated. So that's why it's important to have a third party proof of consent, even on your owned and operated, so that you can say, we had nothing to do with the generation of this certificate. This is by a trusted third party brand. And that is what they are saying was shown on that page for the highest form of consent on all of your lead types. Even on your warm transfers, which we talked a little bit about
Yes.
earlier today, you can have proof of consent on those as well. That's just something that you want to require from your lead vendors, because your lead vendors are generating those warm transfers from a lead themselves. So you'll just require that from wherever they got that originating lead from, that they have a trusted form certificate on there. So warm transfers is another place that you want to make sure that you have that present as well. So
Maybe can
now,
I add
yeah,
one more
yeah,
thing too?
please, please.
Yeah, no, just to mitigate risk too. I think the other point is to consider joining an association that's the right fit for you, because you want to be in the know, right? So there is so much changing right now. Again, you have to watch the states. There's carriers, the phone carriers are blocking a lot of wanted calls too.
Mhm.
And we're seeing that they get labeled spam likely, and there's interactions with a lot of associations are trying to work with carriers, trying to work with regulators to help break through the carriers to get wanted calls through, not label us as robocallers, right? So I would say, like, I obviously am a firm believer in reach. I'm on the board, but there's other associations, whether it's like online lender, OLA, which is the Online Lenders Alliance. There's the Insurance Marketing Coalition. Again, it just depends on which fits your organization best, or you can join multiple associations. There's nothing wrong with that. But I do think it's important to stay in the know and make sure that you're taking that information from that's being passed down in these associations, spreading that to your org, your marketing team, your compliance team, and making sure that you're deploying your marketing dollars in the right fashion with the tools that you're mentioning in place, obviously on a day-to-day
Mhm.
basis. So just I would add that the consideration of joining an association that's the right fit for you.
That's a great point because while you can have all of these things in place, it's still good to be in communication with what's going on within this landscape, what lawsuits have popped up, what best
Yes.
practices are continuing to be put into place. So it's good to have community within that while also
Yes.
having the tech in place. That combination is going to be your best option there. And the other thing, when because we spent a good time talking about serial litigators here, and I had mentioned in a lead conduit flow, the add-ons that we have, two of them are litigator scrubs, either through Blacklist Alliance or Contact Center Compliance, so that you can check the leads against those that come through to make sure that those don't hit your CRM system, reject those leads that go against those. So those are three really important things to have in place on the tech side. And then having community joining the organizations to be in discussion about this is a great extra layer. So now that we've talked a bit about building these relationships, getting the leads to your CRM system, making sure that you have compliance in place, the last step of what we're going to discuss today is actually reaching out to these consumers, either through outbound dialing, but we're going to spend a little bit of more time talking about SMS today and even conversational AI, because as we know, AI is everywhere right now and is so helpful to be used and getting in contact with these consumers. And Joey has had some experience with these conversational AI SMS platforms. So he's going to tell us a little bit about how that's performing and the best way that that can be used.
Yeah, I mean, I think you hit the nail on the head, right? Just like every AI is everywhere now in day-to-day
Mhm.
life of consumers, and they're getting more comfortable with it as by the second. So sometimes they understand they're interacting with AI, and sometimes they don't. It's that good. But I know in direct consumer outreach, it's getting better by the second as well. Especially if you're looking at financial services where there's a lot of qualification questions, and consumers, they just may not want to pick up a call right away, right? Like they're, if especially if they're in debt, like they have they're scared that they're, that the creditors are chasing them down, and I understand that. And so there's comfort in knowing that you can communicate, or be able to answer some questions or have some of your own questions answered um, via text. You can schedule a call through AI now as well, which continuously is growing. But it's I've grown up in the space. I used to run a big call center business, and we would just call the consumer when it was convenient for the call center, not the consumer. We just pound the phone, right, and just constantly call them. And we didn't know better. I mean, now that you have the ability to interact and have great conversations and qualify consumers via text, you really need to build that into your workflow. And I had an awesome chat with. I'll be sharing a video in the next day or two about from LeadsCon, my keynote with Jessica Manna, VP of Growth at Better Mortgage. Their whole business uh, is really built off the backbone of AI, especially their consumer engagement and outreach. So they've done a great job. Just they actually use an outbound AI agent to do their outreach. And again, you have to capture the consent. So that's very clear. And now you even want to make it as part of your consent language. You should mention that you're using artificial intelligence, because there is artificial intelligence regulation that will be part of outreach. And again, you don't want to be flagged as robocalling. You want to make it clear that the consumer would like to be called and speak and understand that there is artificial intelligence involved. But once you get that clear consent through your consent language, and you're capturing that through trusted form, the ability to be able to do the AI SMS, but now there's AI outbound solutions that you can use. And if you think about it, an AI outbound agent, it's getting to the point where it's almost neck and neck with where humans are performing, if not even better. They're not in a bad mood. It's not Friday at 4:45 before they're about to clock out at 5. There's no concurrency issues as far as how many calls they can handle at one time. They don't take off for holidays. You can do it in the middle of the night. I mean, can't do outbound in the middle of the night, but you can inbound. So AI has become a big, not only not only big driver for better conversion rates, it's just more convenient for the consumer, right? And it's like they're getting more comfortable communicating. So I encourage everyone that's traditionally built their engagement models off of call center, which is great. I'm still a big fan of call center. Just to consider the AI component, especially for financial services and consumer finance, debt, mortgage, loans. Consumers want that ability to communicate in that fashion and answer some questions so they understand. And it helps your sales staff too. If you're trying to be more efficient with the records, we talked about this high intent diversification, just making sure your sales staff is being efficient to make sure that they have the right leads to engage with, and you're maximizing their sales time, right? Because you're trying to knock out a lot of those screening questions. So there's a lot of amazing. That was a big Talk at LeadsCon, right? I think everybody had different AI communication tactics and operational tactics too. So it's great to be alive through this period because we are witnessing just this transformational movement in how the world operates, and it's just awesome to witness. And performance marketing is a subset of that. Just to see the different channels and ways to even generate leads now too. We're seeing it in ads, right? So it's a great time to be alive.
Yeah, absolutely. And that was a great point that you mentioned about your consent language when it comes to using AI. These tools are incredible, can be a huge time and money saver, but just as everything else that we talked about today, you want to make sure you have the infrastructure in place to do that in a compliant way. So that's definitely something to discuss with your legal team, with your outside counsel. What legal language should be present on that lead so that we are fully covered there. And that's, again, what Verify can check for you to make sure that it's there. Because with using an outbounding AI tool, you'll be able to increase the amount of outbounding that's occurring, which is amazing because it's increasing those interactions and it's also increasing your chance of TCPA risk. So that's important that you have everything set there before engaging in that channel, but definitely a great thing to test. And Joey's a great person to talk strategy on
Thank
those
you.
types of things with, on testing the different channels, different leads, AI conversational tools, what should be happening there. He's a great person to get in contact with that for that.
Thank you, Phoebe. And one other point I want to add
Yes.
too, I forgot, was just real quick, is you're now seeing AI used as QA/QC. So it's more efficient. You can get through a lot more records and you transcribe all the calls, but you actually can send scorecards to the rep. You can send scorecards to
Yeah.
management. And that also has a compliance component, right? Because what if your reps are saying the wrong things legally, right? They're
Hmm.
promising a certain rate, or they're giving the consumer a bad experience. Like, you now have the ability to cost effectively break down every call and understand what the consumers are saying and what your reps are saying. So just wanted to add that's also growing in the AI realm as well.
That's a great point. Yeah, I remember when I was on the lead seller side of things, and my Friday afternoons, I would go through and manually QA the calls and just sit there and listen and pick out, as many random calls as I had the time for. But having AI do that is a much more efficient way to be able to handle that. So that's a great point. We have a couple questions here that we can answer in the last a little bit less than 10 minutes. So we'll answer the two that are in there. If there are any others, feel free to drop them in now. But we have a question here that says, use your crystal ball and look into the future. What is the FCC going to try to pass and or require next? Which is a difficult question to even get into. I wish I did have a crystal ball. But one thing I know is the TCPA has been around for a long time. The proof of consent has been needed for a long time and is needed now. So have that in check now. We don't know what the future is going to hold, but at least one-to-one is put on pause for a bit. And maybe forever. Again, we don't know, but prioritize what's happening now. But we'll see if Joey, maybe his crystal ball works a little bit better than mine.
So only thing I'd add is, yeah, like you said, we're just anything's possible under the FCC. I mean, right now it seems like their focus has been bigger, broader issues like the media outlets right now, and reviewing their communication tactics and so forth, but under this administration, we just really don't. I do think, it's clear, and they made it clear. They commented on the 11th Circuit that they had no interest in taking up the TCPA one-to-one consent. It's possible they will look at revisions to the TCPA under this, good or bad. Maybe unwinding certain things. We'll see. But I do know one thing I want to make clear, because I'm hearing this in our reach meetings, is congressional caucuses, especially there's some movement across both sides about robocalling. And I've been emphatic about this on my LinkedIn posts, and we in performance marketers generally do not robocall, and I don't want us to be labeled as robocallers. And so if Congress or ultimately the Senate decides to build a robocalling bill, I want to make sure they have clear understanding of what the performance marketing community is doing to follow up with consumers after they've raised their hand, and why we don't robocall. So I do think you should be conscious of that. Again, joining an association would be helpful for anyone on this call today that wants to make sure that they're in the know.
Yeah, yeah, especially for that person that dropped that question. That's where you're going to hear the first rumblings of anything that would affect the TCPA or FCC regulations there. So we have one last question, which is, how do you track lead attribution when multiple systems and partners are at play? Who is at risk? Who is responsible for compliance? So I love this question because I feel like there is constantly confusion about who is responsible when there is a TCPA lawsuit in play. And so what is super important is that you as the buyer, you as the party that is contacting this lead, need to have the proof of consent, because you are going to be the one that the consumer comes to. They don't know where or what company that lead was originated at. They only know what company they were contacted by. And also, just legally, you as the party contacting the consumer is the one that is liable. When I was on the lead seller side of things, we would also store trusted form certificates sometimes as a backup for our buyers, but there are so many lead generation channels when it comes to working with an aggregator or a lead seller, and not all leads have a trusted form certificate stored there. Or maybe they set up a new site and they forgot to put the trusted form script on, and you were depending on them to have it, and that would have been something you would have caught had you been the one storing it. So there were many instances where a consumer would come back to the seller and say, hey, this lead just complained and we need you to give us a trusted form certificate. And we didn't have it. And so that's why you as the buyer need to have all of that. You should not rely on any other party to be storing those certificates on your behalf. Anything else you want to add to that one, Joey?
No, I mean, you're 100% right. And the attribution model also, just going back to that part of the question, that's why lead conduit is also very helpful in understanding how many times you've seen that consumer come through your platform. And then you can build out your attribution rules, last in, first out, or whatever it may be, but giving credit to the right source and making sure it's compliant is critical, and tracking how many times that consumer has engaged with you. So attribution, if it's a true hand raiser, they may be on multiple platforms, right? Which is, they're very motivated. So you just want to make sure you track that properly, whether the compliance piece and then payout, like you're paying the right partner on how you build your business rules for that event.
Yeah. And that's the other thing that Lead Conduit can help with, is building custom reports so that you can look at leads and lead performance based on vendor, and how that performs in your Lead Conduit flow. How many leads are failing from a vendor? What's going on there? How many leads are getting passed through from a vendor and meeting your ideal customer profile? So having that automated, having a platform to be able to take a look at that is super helpful. But we got through all the questions. We are right at time here. So thank you all so much for joining. If you would like to reach out to me directly to discuss possibly setting up an ActiveProspect account, you're welcome to do that. My email is phoebe.pinder@activeprospect.com. And then Joey, if you want to go ahead and plug your email and where people can find you too, that'd be great.
Yeah, absolutely. And like Phoebe mentioned, I'm happy to help any brand look at their performance marketing needs, whether it's different channels, different lead generation partners. I have extensive, 20 plus years of experience in the space, working especially in consumer finances. I started in the mortgage marketing space. So feel free to reach out to me. It's joey@linerconnections.com. And Phoebe, I just want to say thank you for having me join you today. It's been awesome to be able to go back and forth with you, and hopefully we added a lot of value to the community today.
Yes, it's been great having you. And thank you, everybody who has joined. It's been a great hour, and we will get you back to the rest of your day. Thanks for joining.
Thanks, Phoebe.